As we get this morning kicked off, it's hard to start without acknowledging the conflict, the attack, Russia into Ukraine. We all have seen over the last few days, over the weekend, and our hearts go out to everybody there and everybody here that has loved ones or family members that are involved in that. And we pray that it ends quickly. The questions that seem to come up at this time is how can some of these world events, would this impact the housing market? And in just a minute, I'm going to share an email that a KCM member sent me towards the end of last week about this question. They forwarded to me somebody they were working with that had this question and said, how would you answer this? And I'm going to answer that this morning on the deep dive. And feel free to share this deep dive with anybody in your office or anybody that you're talking to that's wondering, how could this impact the housing market? So let me talk about impact overall and what we're seeing. The first impact that is clear and you can see right now is the impact in the stock market. And even this morning, you look at the stock market's down because of the instability, the questions of what's going to happen here. What is this going to be drawn out? Is this going to end quickly? What's going to happen? There are questions involved in that. And let's for a minute kind of forget, the rich people idea of the stock market. Every teacher in this country, every first responder, every factory worker that has a 401k has money involved in the stock market, likely a sizable portion of their net worth. Where's the other, significant portion of those individuals' net worth? Likely in their homes. Now, right now, what we're going to talk about is what could be the impact in real estate. My message to you is, in this scenario, we can control what we can control, and we can lead in the dissemination of real estate information relative to that, in those that have questions about that. There are questions, they are coming up, and I'll read you this email. I'll share it here real quick. I kind of, did away with the names and just copied the text, and it came in middle last week. You can see right here, Blank and I are concerned that the Russian-Ukraine crisis could cause housing prices to drop, and we might not get as much as we discussed. What do you think? This was a KCM member that forwarded this to me. It was an email they had received from a seller they were working with that's concerned about this situation. I think it's a legitimate concern. I think it's one that we need to be prepared to answer in the market right now. That's why I'm going to talk about house prices here in just a minute. Two things. I'm going to tell you what I told this individual. I called him up. A lot of times people will email me, and I'll just give them a call up because it's the easiest way to communicate this. Two things that I want to say about this. First, this conflict, this instability, and I mentioned the stock market, has slowed or paused the rise in interest rates. We may even see a little bit of relief in interest rates, in the near future due to this. So that's one impact, is an interest rate impact. The second impact, or the second answer to this question, there is nothing that we can see right now, or if I was you answering this question, there are no experts that I'm following that say this is going to have a negative impact on home prices across the country. And that's what I'm going to get into in just a minute. So my encouragement for you this morning is take this information we're about to talk to and be the knowledge broker to the clients that you serve about home prices. Because if you weren't, if you're not in the business, you're talking to somebody who's not in our business every day, you'd be concerned about it. I would as well. And saying, okay, what is this going to mean to home prices? If I'm thinking about selling, thinking about buying, how is this going to impact? So let's hop into our topic this morning. It's home price appreciation. There's some new information out that I want to share with you so that you can be the most educated agent on this subject in the market that you serve. So first one slide I'll show here is price appreciation starting to tick up. If you're a KCM member, if you've been following the deep dive, you're familiar with this slide. This is a look at year over year home price appreciation by percentage going all the way back to January of last year. And this is the rate where they measure. Let's start back January of 2021, a little over a year ago. Where were prices at as compared to a year prior? Okay, so you start back in January, 10% appreciation. And last year, appreciation started, happening at a quicker pace as we went through into the summer months and started to, plateau out here around 18% appreciation. Well, the latest information from CoreLogic coming out about December home price appreciation, it ticked up just a little bit more. So, we talked about, okay, is home price appreciation going to start to decelerate? Well, we're seeing it plateau. We're not seeing it start to, come down and appreciate at a slower rate, not depreciation, but less appreciation. Record appreciation in homes all across the country has been the story, for the last 2 years since the COVID pandemic started. And we're seeing that continue on in December, even go slightly higher on the average home price appreciation, according to CoreLogic. If we look at others that look at this information, December year-over-year price increases, FHFA says 17.6%, CoreLogic 18.5%. I just mentioned that, and S&P Case-Shiller 18.8% appreciation. Why are there variances in these? They're looking at different areas of the market. Some include things that others don't, but let's just call this a lot of appreciation right now in residential real estate and not cooling off. If anything, we're seeing the lack of inventory continuing to push prices higher. Matter of fact, FHFA just said 6 regions had greater year-over-year appreciation than this time last year. Okay, so you see the regions broken down right here. The ones that are in green had higher appreciation this year than what they had this time last year. So if you look at that, we're seeing appreciation certainly in some areas start to tick up a little bit more. Now, as we head into the spring, many are asking, what's that going to, to impact? I'll give you a quote here real quick from Craig Lazara, who manages the S&P element of this. This is the highest calendar year increase in 34 years of data and substantially ahead of 2020. It's 10.4% gain. For the past several months, home prices have been rising at a very high but decelerating rate. The deceleration paused in December as indices were slightly ahead of their November levels. So what is he saying? So in December, the deceleration paused. We saw it slightly higher. They started to pick up pace in December. And this is what this looks like if you were to look at it graphically of FHFA, CoreLogic, Case-Shiller. I would have these graphics on my phone or wherever, I carry around an iPad so that I could show somebody today that's concerned about house price appreciation and sort of educate them on what's happened over the last year. And this is the rate at which homes have appreciated. We saw that pick up steam throughout the year and now has sort of leveled off. Okay. Now, many looking into the spring saying, what is this going to mean for the spring market? Well, the quick answer to that, price is always going to be determined by supply and demand. Where do you see supply right now? Where do you see demand? And a lot of people, I've said many times, go pull this information from your MLS in the market that you serve and look at active listings. Look at where you're at today as compared to, February of last year. We're going to wrap up February today. Look at actives in February last year as compared to actives in February this year. And, if you're seeing more inventory coming to the market, you have indications more and more inventory is coming in, well, then that's going to, give you more supply to meet the demand that's out there. If you see less inventory, well, certainly we know demand is continuing on. That's going to give you a picture of what's going to happen with pricing. We can be the educators on price right now for those that are concerned. Again, going back to where are the 2 areas that most people in this country have the significant portion of their wealth tied up. It's going to be in maybe retirement funds, stock, and it's going to be in their home. And they're very concerned, very much in tune to this question right now, and we can be the educators on this. I want to give you a couple of maps from FHFA. Change in price over the last year, 17.5%, the national average you see at the bottom there. And you can see, depending on the state that you're in, I mentioned several of you on this morning from North Carolina, 21.1% average appreciation in North Carolina. You can see it across the country. what appreciation looks like over the past year. Keep this again on your phone, on a tablet, or something that you can access quickly when you're talking to somebody about that, to be the educator on home price appreciation. Let's take it even further. Change in prices over the last 5 years. The national average is 54.5%. And again, depending on the state that you're in, you can see that percentage by state. FHFA is broken it down even further, changed since 1991. 258% appreciation in residential real estate since 1991. If you look at just the appreciation in buying a home, if you bought a home in 1991 as compared to today, I would be using some of these graphics to help answer that question: should I buy now? What's appreciation going to look like 5, 10, 15, 20 years down the road in this country for a home bought today? Somebody that says, do I want to buy right now? I feel like I might be buying at the top of the market, or whatever opinion they have about that. We can be the educators about that. Okay. I'll go back to where I started, back to this, this question that was forwarded to me in the email. I'm concerned that the crisis could cause housing prices to drop, and we might not get as much as we discussed. So what I tell you, the one effect is this sort of stopping of the rapid ascent of interest rates. If you look at the 10-year Treasury this morning, slightly down, may see some relief in the average 30-year fixed. What was the other answer I gave you? No experts that we are following, and you would say that as I am following, if you're talking to someone, have any indication this is going to slow down home price growth going in this year. And what are the latest forecasts? An average of just over 6%. CoreLogic on the high side at almost 10%, Zelman at 3%. I certainly would say I would go higher than the average right now, somewhere between 8 and 10% home price appreciation right now in this country. But it's a question that we can get out there and we can be the knowledge broker. We can be the most informed agent in our market on this topic. So I'm gonna have Jess come on in just a minute and let me know if there are any questions. But before I do that, if you're wondering how to share some of this information, we have a social guide that you can download for free. And they're going to post the link in the chat here for members and for non-members of KCM. If you're not a KCM member, we want you to join. Give it a try, a free 14-day trial. But you can go to trykcm.com/social guide. And it's a complete guide for real estate agents to social media. Many of you wondering, what should I share? How frequently should I share? This has all the answers for you. And we want to give you that as a resource if you're wondering, how do I get better in this area? So I'll pause there for a minute. Jess, do we have any questions that have come up this morning?
I Dave, I actually don't see any questions as of right now in the chat. Yep.
Okay, perfect. Well, listen, I'll wrap on that for the deep dive this morning. If you ever have questions, you can always reach out to us. We're here to serve you. We're here to have your back on all the information that you need to feel confident and be the knowledge broker for the clients you serve. So let's get this information out there to those that have concerns and questions about home price appreciation. We'll see you back next week on the deep dive. Take care.